Yo, what's up you guys? Welcome back to a new video. And in today's video I will give you guys the usual weekly market breakdown where we're going to take a look at the dollar index, euro USD, the Nasdaq, Dow Jones, as well as gold from a technical as well as a fundamental perspective. If you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. If you do enjoy the content, please do consider smashing that thumbs up button there as well. Now, without any further ado, let's jump straight into the fundamental information, because we know fundamental data drives the long-term momentum of the market. Then technical analysis gives us an insight of where we need to apply entry into the market there as well. Okay, so last week was the week of the 27th of March into the 31st of March. So we're gonna jump straight into that, right? So like I said over there, the 27th of March, which is basically right there all the way till Friday, we had the consumer confidence. If you don't know what the consumer confidence is, it's basically how the consumer sentiment about where the market is and how the market's doing, about how they feel. Do they feel the market's going to recover? Basically like that. Final GDP is basically the gross domestic product, which is the overall status or the overall outlook on how the market's doing. Unemployment claims tells us how many people had lost their job, then filed for UIF that we have in South Africa. Then we have the core PCE price index, which I believe is also a survey that is conducted there as well. Now next week we've got a week full of minds. Then you have to be very careful. Once again, this is only dollar index news, so we've got the PMI, which is the purchasing managers index. We've got the JOLTS job openings, which is another survey. You got the ADP, which is also a survey, which is the automated data processing. We got the PMI, which is the purchasing managers index. We've got the unemployment claims, which I've just explained to you now. Then we got the average hourly earnings. We've got the NFP. We've got the unemployment rate there once again. Now, without any further ado, let's jump straight into the information. First article we got here is from CNBC. It says here stocks close higher on Friday as the Nasdaq notches best quarter since 2020, which we know was basically when COVID struck and stock market was not doing too well. It says here stocks rose on Friday as Wall Street wrapped up a volatile but winning quarter that saw more Federal Reserve rate tightening and mini financial panic spurred on by the collapse of the Silicon Bank, which is quite confusing if you think about it, right? Like a lot of other stuff that's currently happening, right? So the thing is, markets was booked by Silicon Valley Bank, and then the Feds was like, it's fine, we're going to help you, we're going to bail you out. And then the stock was like, it's fine, we're going to go back. So there's a lot of contradiction currently happening in the market. And I can tell you now, the Feds are probably going to catch everyone off guard again, because we do expect a correction to take place in the stock market after a massive rally that took place. And also, if you look at the GDP data we received, it gives us an indication the US dollar is still doing quite good, but the correction is more likely to complete when the job data come out, because I can guarantee you now that the unemployment rate would have probably not gone up but come down compared to what we saw last month. Now, I'm not going to spend too much on that. Next thing, we had the GDP data, and we've got an article over here from Daily FX, is that the US dollar, breaking news, final US GDP Q4, basically the revised lower, but data remains robust. However, despite the quarter-on-quarter drop in the GDP, as we've probably seen coming through as well, the US fundamental data continue to surge forward. ISM services data remains in expansionary territory early this week, with the Consumers Board Consumer Confidence Survey beat estimates, and job continues to be added to the economy ahead of next week payroll information. Now, this week I am going to be looking for one thing, for the dollar index to close the gap that it opened up last week Monday and never basically closed, and that is about it. When we get to Friday, it's going to determine whether or not we can expect the market to close the imbalance, like the SMC traders would say, or basically for the market to just rally, and go and hit resistance, because that's basically what we have seen happening in the past of a year. So I just expect a correction on the dollar, close the gap, maybe a consolidation until the NFP data comes, and then we could see either a continuation to the downside for the market to go and hit support, or for the market to go and fill in the imbalance, like the guy from Italy would say there as well. So we're going to start with the dollar index. So the first thing that we do know is the dollar index had obviously opened up with a gap over here. Now, you know it as well as I do. When the market opens with a gap, the market is normally expected to close the gap. What we can see is that the dollar index, here's a good example for you over here. What we have over here basically is we can see there the market opened with a gap down, fill the gap, then move to the downside. Now, some people is going to tell you that there's something called a gap strategy. Yeah, it's called a gap strategy. So I don't know what that means, but it is when the market opens with a gap, which is something you'll normally see on the US 30, not US 30, the German 30 or the DAX 30. That normally happens almost all the time, because the DAX is so volatile. It's more volatile than the Nasdaq. But firstly, I do expect the index to go and complete that gap, right? Once the index had completed that gap, basically, this is going to make room for retail traders to come in here, right? Because that is what, because that's what you guys do. Okay, you wait for the market to hit resistance, right? So this is what I do see. Now, I know I'm on the 1 hour time frame, but this is because I need you to be very careful. The market's going to fill the gap or close the gap. Then your favorite traders that doesn't post any losses on their Instagram stories, because they only want to show you how they win, but they are not going to talk about how they bought and sell gold and that went south. But that's a story for another day. So what you would notice is that the market would then come into this level over here. Retail traders would go like, it's definitely a sell. However, that is not going to happen, because why? That's the most obvious thing that we expect market to do. I do expect a break above that level and then a continuation, but we're here to talk about the daily time frame. So here on the daily time frame, I expect the market to continue higher from exactly where it is now. Firstly, we had the market broken above this very strong level of resistance, came back, tested as support. If you watched the previous analysis that I done, you would have seen that I have explained this analysis there as well. And I know a lot of people were like, thank you, it was going good. Just said that not too many people are that happy about withdrawals, but I've covered that as well. And not too long ago, I stumbled across a video where I saw someone said that they are expecting a payout from this certain prop firm, which is weird, because the person who's talking about it, it is not justifiable. So thanks for the update after I ranted on Instagram, but that's not enough for me to sell my boat. Any case, next up we do have the dollar index over here. Now we can see the dollar is also heading towards the resistance. I don't believe this resistance is gonna hold. I would say monitored on lower time frames. So I do expect the index to continue higher and for the market to basically continue this consolidation phase, and then from there we need to monitor the market once again. And I'll tell you now, the market's probably going to get there by the time the NFP data needs to be released. Next up, we've got Euro USD over here. Euro USD was an unfortunate trade for us on Friday. Basically, what happened for us is we got into the trade there. We moved lower, 0.75%. We had the stops at break even. Market went up, took us out at break even, started to move to the downside there as well. But we do expect a deeper correction. So obviously, it's going back onto our watch list here once again. Now we can see over here the market basically broken above this very strong level of resistance. Apart from that, the market also printed resistance over here. Now this level of resistance got broken. The market came back, tested as support. Support did not hold, so that support by definition is now once again resistance. Now the best way to approach this is quite simple. We are going to wait for the market to give us a slightly further pullback to the downside, because we're looking for a 0.382 that lines up perfectly with that level of resistance. Got broken as support, and support did not hold. So once again, as resistance, the best way to do that is take your Fibonacci from the high to the low. What you're looking for is a 0.382 to line up with the previous structural level that you're targeting, and we're going to identify where the market's going to go lower down to. Now you can see over here, that is where my Fibonacci level is. So that is where I anticipate the market to continue lower as we're going into next week, and then from there I expect a pullback and then a continuation to the downside. Again, by then we should be getting closer to the NFP there as well, and then from there you can definitely start monitoring that price action and for the market to give us a nice value opportunity. Then Nasdaq over here again just reached a level of strong resistance. I do expect a nice liquidity grab to the upside. The market also broken above this level of resistance that is now acting as a level of support. The market gave us a clear impulse. After an impulse you expect a correction, and we have this massive impulse. After an impulse you expect a correction before a continuation to the upside for the market to continue the clearance and go and fill in the imbalance, like you know, like some guys would say. It's not it's called imbalance, but it's called we just call it resistance. So after an impulse you get a get a correction, and the best way to measure that is take your Fibonacci from the high to the low. Then you can see we've got a 61.8 confluence lining up perfectly with that structural level over there. Now the best thing to do is to not just jump into this market because it's trading at resistance. We always wait for price action to develop before you look for wait for price action to develop bearish, because this market is quite bullish once again over here. So I do expect a correction going into next week, and then from there the market could give us potentially the final move to the upside once we get the new job data. This was another opportunity that we got into here as well. Basically what had happened here was we had a order limit there. The market filled our order, it went lower. I said, guys, please close this position, and then the market says voila, and then it just moved to the upside. But it's fine. Closed March with just over 30%, 33.0%. Yes, so I'm quite happy with that there as well. Dow Jones a little bit more move to the upside. We'll probably open up with a gap down, then go up, and then continue that move to the downside. What we have over here, market printed support, broke below support. The game back tested as resistance. Resistance didn't hold. We can see how the market was playing Mr. Piano Man on this level of support once again. Support did not hold. Market came back tested as resistance. We got a market coming back there once again. We have this massive impulse. So I do expect the market to continue higher, then go create that resistance over there, and then potentially pull back to at least the 0.382 of the Fibonacci taken from the low to the high of the impulse. And I'll probably say the 61.8 pullback, or potentially a 50% pullback after such a massive bull run. Next up we've got gold. Now gold, I'm not going to change anything. This was still the same analysis that I did on last week, that where I said we can expect the market to continue higher. What I do expect now, because we're heading in a week of NFP, and because there's some uncertainty to be expected in this week, I do expect the market to I'm not gonna say there, I do expect the market to start a consolidation phase in this week, because remember, before high impact news the market normally consolidates before giving us a new direction into the market there as well. Guys, that is it from my side. Thank you for your time. If you're looking for signals or mentor sub, you can still apply for the mentor sub for April month, because the class is going to be on Saturday, which is also going to be the only class that I will be doing for this year, or the second class, because I've done one before. That is it from my side, guys. Thank you for your time, and as always, cheers for the ears. Enjoy the weekend. Stay safe. Thank you.